that it's why silver's so cheap. I hear people on your program, I see them on the internet. It's amazing how many people are now bullish on silver and expecting very high prices to develop for all different reasons. But it's gotten to be you can't find a genuine bear, somebody who's going to say, oh, silver's going to go down for the next 5 years and it's going to fall 50% in value and it's going to do this and it's going to do that. Everybody's bullish on silver, if you've noticed. Not that people have bought it yet, and it's not overbought because the public doesn't have any idea of what the potential is in silver, but the people who study it, commentators, analysts, people on your program, people on other programs, people writing about it, there's everybody's bullish on silver. And the reason that they're bullish, I don't think they realize that, some do, I don't think they all realize it, is that they all know that intuitively silver is cheap. It's cheap compared to gold. It's cheap compared to the stock market. It's cheap compared to any asset you can throw out there. Silver is cheap. And I think everybody who's bullish on it realizes this, okay, that silver is so cheap compared to anything. In fact, earlier this year, it got 5,000-year lows since the dawn of recorded history against gold, which is probably the best measure. It's cheap. It's dirt cheap. What people may not realize is, why is it so cheap? And the reason it's so cheap is what I just said. It's these 8 crooked banks, okay, that have this death hold, this giant short position on the COMEX futures market.
Remember the 5th of November, the gunpowder, treason, and plot.
Well, I think what you're referring to is the physical movement of silver being brought into the COMEX-approved warehouses and taken out of those same warehouses, which there is a daily statistic that shows this, that anybody can get. It's free. You just go to the CME website. And what happened, since I've been following it, since the mid-1980s, I noticed that in April of 2011, which was when silver hit its second high at $50 an ounce, there started to be a very unusual pickup in this daily turnover, this movement, this physical movement now, not paper trading, physical, the silver being brought in on trucks to the COMEX warehouses and taken out, different silver taken out from other warehouses in the COMEX system. And it started in April of 2011, same time we hit the $50 mark for the second time. It also started coincidentally when J.P. Morgan opened up its COMEX silver and gold warehouses. And what happened was we've had this tremendous movement. They've been moving on average close to 5 million ounces a day, 5-day work week, 5 million ounces a week roughly, from 2011, where it was never even close to that amount. And over time, it's unusual. It's like 250 to 300 million ounces a year. And over the past 9 years, it means that some 2.5 billion ounces, billion with a B, have been moved in and out of the COMEX warehouses. Now, there's been a net increase of about 270, 80 million ounces up to 380 million ounces presently over that time. So there's been a slight net increase, but we've had almost 10 times that amount moved in, brought out. The question is why? Why is this so much silver? And it's only happening in silver. It hasn't happened over the last 9, 10 years in gold or copper or palladium or platinum. It's just silver that stands out. And the reason I've come up with, and anybody is free to come up with whatever reason that makes sense to them. And I'm all ears if somebody wants to suggest a different reason. Why is this so much silver being moved? And I've concluded that it's basically because silver is an industrial commodity being used in thousands of different industrial applications. And it's industrial user demand that is driving this physical movement. And what it shows is how much in demand silver is as an industrial consumable item. And the stuff is just spinning in and out of these COMEX warehouses because of this industrial demand. What it means for prices and what it means looking forward is that there's so much industrial demand for silver right now, basically accounts for almost all the silver that we take out of the ground on an annual basis, that if we get just a little bit too much in investment demand, which I think is destined to come, we're going to blow the roof off the price because we have this strong industrial demand that's not going away. And silver, by the way, is the only commodity that has this dual demand profile, where it's both a basic industrial commodity and also a primary investment asset. Any other commodity that you kind of look at, whether it's gold, which is basically purely an investment item, or copper, which is purely an industrial item, they bracket silver in the sense that silver has both. It is both an industrial item and an investment item, and the joining of the two is going to hit a point in which there's going to be competition for the price, for the silver, okay, that's going to drive the price to the sky, I believe. And I think we're getting close to that.